Hello, CMA candidates. Welcome back to this channel. And if you are planning to appear in your upcoming CMA exam, this platform is right for you. So before we begin our MCQs practice questions, so let's introduce the course outlines and its sections. We have total 6 sections in number. In each section have multiple modules. You can just see on your screen, left side of your interface. All 6 sections have multiple modules. So today we are gonna begin with our first module, external financial reporting decisions. So this is entirely based on financial reporting. So without any further delay, so let's begin our first video and keep connected yourself with this channel to find any upcoming MCQs based exams. So if you want to practice any of the modules, just click on the module you want to practice. For instance, this is first module of external reporting. And then afterwards, click on MCQs exam paper. So it will be directing you towards this interface and click on begin MCQs. Before we start this MCQs exam for external reporting, I would like to introduce the accounting cycle. How does it work? Accounting cycle is basically a series of steps through which we prepare different financial statements, and we conclude our accounting cycle with 8 different steps, starting with the journalizing, basically the act of recording the transactions into the original book. That's called journalizing. This is our first step of accounting cycle. After that, we need to prepare separate accounts, separate ledgers. That second step is posting the journalizing into ledgers. So that's typically known as posting process. So this is your posting, converting the transaction from journal to ledger. Then we prepare the trial balance afterwards. This is the third step of accounting cycle, and that's unadjusted trial balance, because in third step we did not have any adjustments. Afterwards, we need to prepare some adjustments. For instance, prepaid expenses, we need to adjust how much prepaid has been expired, or maybe outstanding expenses, etc. So we need to have adjustments after the trial balance is made. The fourth step is done. Fifth step is we need to prepare adjusted trial balance. This is our fifth step in number. This step is ready to make your financial statements. So it means we need to have our financial statements ready with the help of adjusted trial balance. And these financial statements are 5 sets of different accounts. So technically known as statement of financial position, statement of cash flows, statement of owners, changes in owners equity, statement of profit and loss, this commonly known as income statement, and notes to the accounts. So we have total 5 sets of financial statements. After we are done with it, we need to close the temporary accounts. Temporary accounts mean the accounts which are time sensitive. Time sensitive mean they belong to only one particular time period. They cannot be carried forward to the next period. So if you see, we need to prepare the closing entries. Closing entries mean the temporary accounts must be closed for this period, and we need to carry forward to the next year only permanent nature accounts. And permanent nature accounts mean the accounts which can be carried forward to the next year. For instance, the assets account, the liabilities, and owner's equity. So these are permanent accounts, and temporary accounts are revenues and expenses. They belong to one particular time period. They must be closed. And then we need to prepare the post-closing trial balance, or we also call this after closing trial balance. So that's the last step of accounting cycle, post-closing trial balance. You can see in these 8 steps, we are ending up with our complete accounting cycle. Let's begin our first MCQs exam. First MCQs question. A company prepares a document at the end of accounting period after all adjustments are recorded. So point to be noted here, after all adjustments are recorded. A few minutes before, I was talking about the adjusted trial balance, and then we prepare the financial statements. So technically, they are talking about adjusted trial balance. This document proves that total debits are equal to total credits, and it is used in the preparation of financial statements. 100% the same explanation I made, that adjusted trial balance is ready for preparation of the financial statements. So I would like to say which document they are talking about. They are talking about adjusted trial balance. So very easy point, D is the correct answer. But let's see why other options are not correct. Adjusted statement of financial position, no, that's not correct answer. Adjusted income statement, that does not exist. Post closing trial balance, that's the last step of accounting cycle. So the document they are talking about, which have all information ready to be preparing the financial statement, they are adjusted trial balance. The correct answer is adjusted trial balance. Let's begin with the next question, MCQs based. A post closing trial balance shows the following. Post closing trial balance means after closing entries are made, we are left with only permanent accounts. Temporary accounts are closed. So here it is says only income statement accounts. No, we have permanent accounts, and income statement are time sensitive. So this cannot be the right answer. The balances of all accounts before adjusting entries are recorded. That's unadjusted trial balance. That's not talking about post closing. Only permanent accounts with their balances. Yes, this is the right answer. As I just mentioned, post closing trial balance will have only permanent accounts, and any temporary accounts will be closed in 7th step. So I think so. Correct answer is C, but let's see what option D says. Only temporary accounts, not at all. Temporary accounts are closed. So only permanent accounts with their balances would be correct answer. Yes, that's it. We have finished our first module with the help of accounting cycle. So if you want to practice your CMA part 1, keep connected yourself with this channel and stay tuned for my next video.